Well, there's been a lot of buzz lately in the media about falling home prices and increasing inventory. But is this really the beginning of another housing crash like we saw during the financial crisis? Let's take a closer look. First, let's talk prices. And all the data that I'm going to share with you is according to and courtesy of First Trust Economics. They tell us that the Case Shiller National Home Price Index is flat for 2025. This is through the end of April, and it's up just 2.7% over the past year. So, yeah, that's a slowdown, but certainly not a collapse. What we're seeing is, we think, stabilization, certainly not a free fall when it comes to housing prices or values. The fundamentals of today's market, so much stronger compared to the early 2000s. And thanks to a decade of steady appreciation and larger down payments, homeowners now hold about 72% equity in their homes. That's one of the highest levels since 1960. And that means most homeowners have a solid financial cushion, unlike the highly leveraged buyers during the financial crisis or at the beginning of the financial crisis. And then let's look at mortgages in general. As of the end of the first quarter of this year, almost 93% of mortgages in place today are fixed rate, not variable rate. And over half of all mortgage debt is locked in at rates below 4%. The average rate across all mortgages is right around 4.3%. So this mortgage lock-in effect is discouraging selling and keeping inventory low, tight, and turnover, of course, low. So while rates are high today, most homeowners aren't feeling the pinch, and they're certainly not in a rush to sell because they don't want to trade up to a higher mortgage rate. And that brings us to inventory. Yes, listings are up almost 18% higher compared to a year ago. But let's put that in context. Supply is still over 14% below the pre-pandemic, pre-COVID levels from May of 2019. So while the market is normalizing, to us, it doesn't look like it's flooded. Demand might be softer due to higher rates, but supply remains tight enough to keep things balanced. So to us, this isn't a market in distress. It's just adjusting to new conditions in the market. So is the housing market collapsing? We don't think so, at least not quite yet. The data tells the story of resilience, not ruin. And with strong homeowner equity, locked in low mortgage rates, and still low inventory, to us, the foundation still looks pretty strong for the overall housing market. Well, that's what we wanted to share with you this week. As always, if you have any financial questions or concerns about this or any other topic, give us a call, send us an email. We'll get you taken care of. Otherwise, we'll talk to you next time. Thanks.